400 years ago, two tiny villages on the edge of the North Sea changed the world, and they didn't even know it. They weren't trying to invent anything. They weren't bankers. They weren't geniuses. They were fishermen and farmers who just wanted pepper. And what they figured out, standing on a muddy dock, arguing about a ship, runs every stock exchange on the planet today. Welcome to Analogy Studio. Today, the origin of the stock market. Told as the story it actually was. How a wooden ship, a bag of nutmeg, and a handshake between strangers built the system that now moves trillions of dollars every single day. In 1602, two small Dutch coastal villages sat at the edge of the cold gray sea. Salt wind, wooden docks, the smell of dried herring hanging in every doorway. Life was simple, predictable, and small. But word had traveled up the coast. Merchants in Lisbon were selling nutmeg, cloves, and pepper from the East Indies for enormous prices. A single sack of pepper was worth more than a fisherman earned in a year. A shipbuilder named Peter, broad-shouldered, plain-spoken, with sawdust permanently under his fingernails, stood up at a village meeting one evening. "I can build a ship big enough to make the voyage, but it will cost more than anyone here has. The timber alone would drain every savings jar in the village. Then there were sails, rope, a crew, provisions for months at sea, and worst of all, the risk. Storms, pirates, disease. The ship might never come back. A merchant named Hendrik, a grain trader known for counting every coin twice before spending one, stood up next. What if no single person pays for the whole ship? What if 100 of us each pay a small piece? The room went quiet. If the ship comes back, every person gets a slice of the profit, proportional to what they put in. If it sinks," he paused, "each of us loses a little, not everything." A widow named Elsa, who sold smoked fish at the harbor market, raised her hand. "How much?" she asked. Hendrik named a figure, roughly what a good month of fish sales would bring in. Else nodded slowly. "I'm in." One by one, others followed. The baker, the rope maker, a retired sailor named Garrett, who walked with a limp, said he'd been to the East Indies once before. "And I'll tell you, the spices are real." Within a week, 93 people had each bought a piece of the ship. Not the ship itself, a piece, a share. Peter built the vessel. The crew sailed in spring. Months of silence followed. No news, no way to know. Else kept selling fish. Hendrik kept trading grain. Garrett sat at the docks and watched the horizon every morning. Then, one October afternoon, a sail appeared. The ship returned heavy, hold packed with pepper, nutmeg, cinnamon, and cloves. When the cargo was sold, the profits were staggering. Each of the 93 shareholders received back roughly 3 times what they had put in. Else reinvested immediately. Garrett bought a second share from a neighbor who wanted cash instead. And that was the moment everything changed. Garrett didn't wait for a new voyage. He bought a share from someone who already owned one. He traded it privately on the dock. Then others started doing the same. Shares changed hands for more than their original price, sometimes within hours. A piece of paper representing 1/93rd of a ship became something you could buy, sell, and profit from, without ever touching a plank of wood. The Dutch East India Company, the VOC, formalized this system, and Amsterdam's cobblestone courtyards became the world's first stock exchange. Not a marble hall, not a tower of glass, a courtyard where merchants shouted prices at each other in the rain. Every element of that story maps directly to what you see on your phone when you open a trading app today. A stock is a tiny piece of a company you own, exactly like Elsa's share of the ship. When you buy a single share of Apple, you own a microscopic fraction of Apple's factories, patents, and profits. You are a part owner. The system those villages invented is called a joint stock company, a business funded by many shareholders instead of one wealthy owner. The VOC was the first, and at its peak, it was worth roughly $8.2 trillion in today's dollars. Bigger than Apple, Microsoft, and Amazon combined. The stock market is simply the modern version of that Amsterdam courtyard, a giant marketplace where millions of people buy and sell these ownership slices all day long. The price of each slice goes up when more people want it, and down when fewer do. Just like Garrett paying more for a share after the ship came back loaded with spices. You don't need to be rich to own a piece of the biggest companies in the world. That's the whole point. It was designed that way from the start. A widow selling smoked fish could own a share of a ship crossing the ocean. Today, you can own a share of a company building self-driving cars for less than the cost of lunch. Owning a stock means you own a real piece of a real business, not a lottery ticket. Stock prices move because people trade them, just like those Dutch shares changed hands on the docks. Supply and demand, not magic. The entire system was invented so that ordinary people could pool risk and share reward. And that principle hasn't changed in over 4 centuries. Subscribe for more stories that turn confusion into clarity.